Hello and welcome to Unacademy IAS, a one-stop destination for all the English medium civil services aspirants. The Union government very recently announced the budget for the year 2026-2027. In the budget, there are certain changes that the government has announced regarding taxing gold. What are the important changes? How the taxation will be imposed and collected on gold investments? Let's understand. Before I start, very recently the Unacademy launched 3-day free trial. Under this, we have seen a lot of you have enrolled, but you are yet to activate the offer. What do I mean by that? You are yet to watch any video, you have not downloaded any notes, and you have not taken any test. The whole objective was to ensure whether you are preparing for the civil services at the union level or at the state level, you will get access to the quality study material, quality classes, etc. You are yet to activate your offer. Ensure you will do one of these three as soon as possible. Now let's start. In recent times, the prices of the gold have skyrocketed. One of the primary reasons, in addition to the demand generally existing in Indian economy, is the inflation rate. Very often, whenever the inflation rate is higher, not just the central bank, but also many of the investors in the market use to invest in the gold. They use the money to invest in the gold and hedge against inflation. So, in addition to households purchasing gold in India, the central bank is purchasing, the investors are purchasing gold investments. As a result of all of this, the demand for the gold has further increased and the market prices also have increased. But one such instrument that has gained favor, not only recently but also in the past, since 2015, has been sovereign gold bond. The SGBs were introduced by the government in the year 2015. And since then, the units worth 147 tons of sovereign gold bonds have been issued by the government. Now, what is the basic idea of a sovereign gold bond? You purchase these particular bonds which will represent the market price of the gold. And these are tradable in the market. And upon maturity, whatever is the price of the gold, upon maturity, the price will be given to you. But until now, there was no clarity. In fact, all the investors assume that whatever is the capital gains, that is essentially the price that I pay compared to the price that I receive, the difference between that. Of course, whenever you talk about capital gains, there is a process of indexation, etc. The basic idea is I will pay to acquire some asset. I will sell the asset. The difference between that after the indexation is called as a capital gains. In the context of sovereign gold bond, until now, every investor presumed that if you have a sovereign gold bond and it matures and whatever capital gains you have, you will not be taxed anything on it. Zero will be the tax rate that will be collected on your capital gains. But now, in the latest budget proposal, government has given a clarification and this has enraged a lot of investors. What is the new proposal of the government? The government has issued a sovereign gold bond. You have purchased the sovereign gold bond directly from the government from the primary market. If you hold on to this particular bond till maturity, only and only then, no capital gains tax will be collected from you. Is everybody able to understand? You will have to hold on to this particular bond. Only then, upon maturity, no capital gains tax on your earnings. But imagine, you have purchased this particular sovereign gold bond from a secondary market. You have sold the sovereign gold bond after the 5-year duration. You have purchased and sold it in the secondary market. In such or all of these particular cases, the government will be imposing the capital gains tax. The capital gains tax and will be collecting this. What kind of capital gains tax will be collected, imposed and collected by the government? It all depends on whether you are holding this for a shorter duration or a longer duration. That is, if you purchase and sell this within 12 months, then the government will basically count the capital gains as part of your income, and whatever is a slab rate, it will be collected as a part of your income as per the slab rate. But if you purchase this particular bond, hold it for a period more than 12 months and sell it in the market, then the government will essentially count this or consider this as a long-term capital gains and impose 12.5% without any indexation benefit, will impose and collect 12.5% of your capital gains. This, like I said, has not gone down well with lot of investors. Reason being, there was no such clarification given by the government earlier. And because the market prices of the gold have skyrocketed, have increased by a large percentage in the recent times, lot of investors have purchased these particular bonds from the secondary market. Now, before I go to the second instrument, here is a very important announcement. For all the aspirants, irrespective whether you're writing the state civil services or the union civil services, you must have understanding of concepts discussed, mentioned in the economic survey. So today at 7 p.m., I'm taking a special class free of cost, entry to everybody on the platform, that is Unacademy platform. Those interested, join this particular class by scanning this particular QR code that is visible on your screen. Do not miss out this particular class. It will start at 7 p.m. today, that is the 4th February on the Unacademy platform. Let's start. Next one, gold ETF. What is the basic idea for gold ETF? ETF essentially is an instrument in the market which will purchase, which represents the market price of, again, which will track the market price of gold. Like I said, in recent times, because the market prices of physical gold have skyrocketed, there has been a huge demand for any instrument that represents the market price of the gold. So has been the case of gold ETF. Now, in the context of gold ETF, how the government will impose, how the tax treatment will be imposed by the government. In the context of gold ETF, please understand short-term and long-term will be classified in the context of whether you're holding the ETF for a period of up to 12 months or above 12 months. If you're holding this ETF for a period of up to 12 months and you get certain capital gains, then in that particular context, this particular capital gains will be counted as a part of your income and the slab rate will be applicable. In the context of more than 12 months, the government will essentially impose a long-term capital gains tax, and that will be 12.5%. 12.5% and without any indexation. Right? And please understand, the government simply says the gold ETF for the taxation purposes will be essentially treated as listed securities. For taxation purpose, essentially will be treated as listed securities. Let's go on to the third one now, physical gold. If you buy physical gold, which many of the households do in India, if you buy the physical gold and sell the physical gold, how the government will impose a tax on it? In the context of the physical gold, the short term and long term, the holding period is essentially 24 months. It is essentially 24 months. That is, you own the physical gold up to 24 months, sell it, get certain capital gains. In that case, the government will count this capital gains as a part of your income and the slab rate will be applicable. Now, if you hold on to this particular gold for more than 24 months, higher than 24 months, then the government will impose a long-term capital gains tax. Capital gains tax, and the tax rate applicable will be 12.5%. 12.5%. Please remember all these particular rates, because in recent times there has been a lot of discussion in the context of gold. There has been a lot of discussion. Be aware of all of these terms. Next, what if you hold digital gold? In recent times there is the practice, lot of these gold jewelry makers, etc., they are issuing the instruments such as digital gold. In fact, very recently SEBI has warned the investors against investing in the digital gold. So if you have invested in the digital gold, what is the tax treatment? Again, the logic of the digital gold is, instead of holding physical gold, you are holding the gold in the form of an instrument. That is, you are not purchasing and keeping the physical gold with you. Somebody instead of you, you will pay money for them. They will store the physical gold. That is basically the idea of a digital gold. So government essentially says, whatever is the treatment applicable for the physical gold, whatever tax treatment is given to the physical gold, same tax treatment is applied for digital gold as well. That is, in a nutshell, right? That is, if you hold up to 24 months, it will be counted as a part of your income and the slab rate is applicable. Slab rate is applicable. And if you hold it for more than 24 months, above 24 months, then the government will impose 12.5% long-term capital gains tax. And finally, the fifth important investment instrument. The fifth majorly used investment instrument, that is gold mutual funds. The gold mutual funds. If you're holding gold in the form of gold mutual funds, and what is the basic idea for gold mutual funds? The mutual fund houses or the asset management companies will again invest instruments associated with gold only. So the gold mutual funds, the tax treatment will be as follows. Here, the classification will be short term, long term, and that will be dependent on 24 months holding period. 24 months holding period. If you purchase and sell within 24 months, whatever gains you will have, it will be counted as a part of your income, and whatever is the slab rate, that will be applicable. Whatever is the slab rate, that is part of your income and you will have to pay income taxes. Second, if it is more than 24 months, you hold it for more than 24 months and then sell it, then right, basically get the money back. In that particular context, your returns will be counted under the long-term capital gains. Whatever capital gains you have will be counted as a part of long-term capital gains, and the long-term capital gains tax at 12.5%. At 12.5% will be imposed and collected on your capital gains, which you gain from the mutual fund, gold mutual funds. So these are the 5 most favored types of investment tools that are used by Indians when you look at the gold as an investment opportunity. Now, based on this, here is an MCQ. The MCQ is, consider the following statements. Gold forms the largest part of Forex held by Reserve Bank of India. Majority of the gold consumed in India is imported into India. Gold is one of the 30 notified critical minerals in India. How many of these 3 statements are true? Do let me know in the comment section of the video. If you have liked this particular session, do not forget to hit the like button. And if you're yet to join our YouTube channel, kindly do it right now. That's it from my side. Take care. See you next time.